Hi there.
Hello,
I don't want to butcher your name. How do you pronounce it?
Lucia.
Lucia. That's easy enough. I don't have anybody in person, and I'm gonna give it a few more minutes to let anybody else hop on the call. But otherwise, it'll just be the two of us. Some
Oh, okay.
one-on-one.
All right, sounds good. I will. Here, give me a minute, and then I will get off or get onto camera.
Oh, you're fine.
Myself, actually, I'm gonna go grab a cup of coffee real quick.
Afternoon pick me up.
Yes, for sure. Okay, here I am.
Hi.
Hi there.
I don't think we've met.
Yeah, I don't think so. I'm fairly new to real
Okay.
estate and to
Well,
Kellerman.
welcome.
Thank you. Thank you.
I'm in the Legacy Canton office. So like if you come in the I don't know, it's kind of the back entrance of the building, not the coded door, but the front door. Um, you dead end right into my office.
Oh, okay, cool. Yeah, we're downstairs. We're with the Ross. I'm with the Ross team.
Oh, okay.
So you might know Storm and Liz Ross.
Yeah, I haven't
Um,
gotten to meet them yet, I don't think.
yeah, I had asked. Well, I work really closely with Jeffrey Fry. He's been training me, so I asked if anyone else was gonna attend, but I guess
Well,
everyone's
there's
so busy.
usually some people like here and there from the team that come to the trainings.
Mhm. I'll be right back. The whole process involved in making coffee.
Yeah.
Like three steps.
Good coffee anyways.
Right, right. I don't put any sugar, but I put a little bit of cream. So I have to heat up the cream because my coffee has to be like scalding hot. And then we have just like one of those I mean it's just the basic Keurig machines, but it has like a few options. So I like to take some flavored coffee and do like a shot of that and then like regular coffee. It's just yeah.
Uh, it sounds like you've got the formula for a perfect cup.
Right. Well, I hope so. I feel like I've perfected it through the time.
Yeah.
Actually, I'm gonna just take you with me since I'm the only one on this call with you. Is
I
that
do
usual?
anything goes.
Yeah.
Um, I know. This week has just gone away with itself with the rates going crazy, but normally I text a bunch of people and invite them
Mhm.
personally and kind of remind them. And I usually get a really good turnout, but I didn't have time to text. So
Okay.
should have done it. Not lesson learned. It
That's okay.
works apparently.
Well, I guess, yeah, I guess it does. Our so we probably because it's just me, we may not even take the full hour,
No. Mm-mm. Yeah. Yeah, and I don't think it would have taken the full hour anyways, even with like questions and answers.
Mhm.
It's very like bare bones basics of refinance. I don't want to overwhelm anybody with too many details, but I want to give you enough that you can leverage it. So a good advantage to people who have been in the industry that have databases built up. And I don't know if you have access to your team's database, but now is a good time to like reach out to those past clients
Mhm.
and see if you can get them connected with a lender because you could potentially save them a bunch of money if they've bought in the last 2 years.
Mm.
And then they're your
I'm a
client for
temporary
life.
refinance.
So
Probably get, sorry, go ahead.
what kind of industry are you coming from?
So I have been in human resources for the past 20 years, and I also own my own HR consulting.
You own what?
Um, HR consulting,
Oh, okay.
so my own HR consulting business. So
Nice.
I've been doing that now for over a year, and I've had my license technically since 2021, but I've been so busy in human resources that I haven't had the chance or the flexibility to
Mhm.
pursue much in real estate. So when I went out on my own in HR, I thought, well, it would be nice to dip my toes in the real estate.
Mhm.
And so I just recently made my first transaction, I should say. I had the buyers. So
Yay.
yeah, it's exciting. We're going through the process and it's my full first time, other than the time in like 2007 when I purchased my first home. I mean, it's
Mhm.
been a long time and things have changed, I'm sure. So it's nice to be going through it from the realtor's perspective.
Yeah. Yeah, and you have the support of a really good team, which is awesome.
Yes, they're fantastic. Oh my gosh.
That's what
I
I
don't know what I
hear.
would do. Oh yeah, they're fantastic. I don't know what I'd do without them. Jeff is
Good.
just truly like one of a kind.
Oh, that's awesome. That's good to hear. I definitely probably need to reach out to them and meet them and um but yeah, and we like Keller Home Loans has a huge offering for trainings and education, and
Mhm,
it's everything, not just
mhm,
finance. It's like, social media and talking your clients through death and divorce and things like that. So
mhm.
I think I've had a few people from the team come to trainings and I've shared like the trainings that I have to offer. So if that's ever, something of interest, obviously, but hopefully you get, something out of today's training too. And I'm hoping that Amanda host disabled participate sharing screen. Amanda did not make me the host on here. I wonder if Nicole can make me the host on here. All right,
Oh no, so you can't
share
can't
my
share your
screen.
oh no. That's
Let
kind of
me run
embarrassing.
out and get Nicole and see if she can
Take,
give me
take your
access.
time. Take your
Because
time.
Amanda's actually in Mansfield today.
Oh,
The share button was green, so I was very hopeful, but we're in business now.
oh, cool.
All right, I made you the host, so it should let you share now.
Good, thank you.
Perfect.
All right, can you see it?
I can.
Good.
Making the most out of lower rates and refinancing. Cool.
There we go. Okay. So again, I'm just gonna make this very kind of just meat and potatoes. I don't want to get down to the nitty gritty. So, hi Jack. We'll start out with the benefits of refinancing, and some of these might be obvious, but like lower rate, lower payment. That's most people's goals. Some people are more interested in shortening the term, which could mean a higher payment, but the whole picture and the savings over time, and I'll show you that an example of that later on, could make sense for their whole financial picture. Especially if they're comfortable in their payment and they can crack down and eliminate, buying coffee, and then they can formulate their own perfect cup of coffee at home.
Right. Right.
And then you have debt consolidation. And one of my favorite stories of this was going through the refinance boom in 2020 and 2021. I had like 4 years of past clients at that point, and a lot of my business was in Florida and North Carolina at the time because I was doing no money down USDA loans online. So I had one lady, and she had done the loan all by herself, but she had bought a family property. So they gave her a really good deal on it, and she had a lot of value built into the property already. So a couple years later, I called her to get a refinance done and get her a lower rate, lower payment. And she's like, I don't think I can do it. I racked up a bunch of credit card debt. Like, we had this go wrong and this go wrong, and I'm afraid, we won't qualify. And I was like, well, I actually get to pay off the debt with a cash out refinance, and I don't have to count it in there at all. And she's like, you're kidding. It's like, no. I was like, what kind of debt are we talking about? Let me pull your credit. So sure enough, it was about $40,000 of credit card debt over the years. And she was making the minimum payments and then a little bit here and there if she could, but even the minimum payments were close to like $2,000 a month. So what we did was we paid all those off. We used the equity in her house, but because her rate was going lower, she still was able to add the $40,000 in debt to her mortgage, keep about the same monthly payment there, and eliminate $2,000 worth of payments on the credit card side. And most credit cards are at 20 to 25% interest. So that principal balance ain't going nowhere.
No, but
Unfortunately.
sorry to cut you off,
Oh, you're good.
Kayla, just to understand, because again, like the financing side is really kind of a little tricky for me. So what you were able to do for her, so that $40,000 of debt basically was all paid off through consolidating it,
Mhm.
and
Yeah,
she didn't have
she
the
had
credit cards anymore.
she had all of this equity in her home that she wasn't accessing. So when we went to do the refinance and we were lowering the interest rate anyways, we pulled cash out at the same time. So we increased her loan amount, but we eliminated all the credit card debt, and she kept about the same monthly payment on her mortgage while she eliminated all those other payments.
Mm.
So, and she's probably sitting between a 2 and a 3% right now versus the 25% she was paying on those credit cards.
Oh my God.
That like, she cried, I cried, like that was my
Like that makes me want to cry.
that was my favorite COVID story. It
Yeah.
was awesome. And I had people that called me, like I had a mother and a daughter that both did cash out refinances because they wanted to put pools in their backyard during COVID. So they did the numbers with the pool company and they did the numbers with me, and it made more sense to use the equity that they already owned to borrow at the lower rate. So, I mean, rates were so wonderful, and I feel like a lot of people are trying to hold out for the 2020 and 2021 rates when, I don't think anybody wants another national or global pandemic.
Mhm.
So, this we're back to our old norm, but people seem to quickly forget. We also have cash out refinances for renovation. Really, cash out refinances can be for any reason. We don't have to approve where the funds are going. So I've had people that pulled money out of properties so that they could buy other properties, somewhere else. But we've also had people that do the renovation refinances, and in those cases, we can get, like, depending on what the loan to values are, we can do the renovation loan particularly instead of just giving them the cash for the renovation, where we actually vet the contracted and licensed contractors. And then we also do inspections of the whole process to make sure that, we have 25% completion. We're gonna pay 25% to the contractor, and we're gonna move on to the second phase. So we have those types of refinances. Private mortgage insurance, and I don't know how familiar you are with this. It's basically an insurance that the borrower pays for the benefit of the bank. So anytime you're not putting 20% down, there's an added risk threshold there. And this
Mhm.
insurance is to offset the risk to the bank until they've built up that 20%. So if, since they've done their first mortgage, the values have gone up and they didn't necessarily pay that 20% in, but because the value went up, their equity increased. Some people are able to remove, whether it's, $20 or, for my former loan, I was paying $115 a month for private mortgage insurance. And that went away on top of lowering my rate. So, and right now I have two borrowers. One who didn't want her husband on the loan because his credit was lower. So she wanted the better rate. We're removing him through the refinance. And then I had a couple borrowers this year that bought a house together and they're breaking up. So we're going to do a refinance, get her a lower rate, and get him off the loan altogether. So the other nice thing that I don't think people even realize, that there's potential to skip one, possibly two payments within their normal mortgage. So how that looks is your current mortgage is designed for you to make that payment anywhere between the 1st and the 15th of the month. Most people want to have it done on the 1st, but you do have that 15-day grace period built in so that you have some flexibility in your budget. When I have somebody in a refinance, what I tell them is, so like right now we have people that are going to be closing on November 8th. So that first mortgage is going to be paid off before the 15th. So they could avoid making that November payment altogether because of the timing. And then for the new mortgage, when we close in the month of November, you skip December, your first payment's not due until January. So the people that I've locked in the last 2 weeks are avoiding November and December's payment. And plus, whatever balance they have sitting in their escrow account for their taxes and insurance, we have to start a whole new one. So they're also going to be getting the difference of that. Now, some servicers will, and this is rare, they'll apply the escrow account to the principal balance before they pay the loan off and close it. But most of them are going to just be cutting a check to the homeowner, and that shows up in the mail, and it's a nice little added bonus too, some cash flow. So this is my favorite time to refinance because it's so nice around Christmas time to have that relief. And then again, like even during the summer, if people are going on vacations, like that's another nice boost. So types of refinance on top of our traditional loan programs, you have to make a selection of the type of refinance you're going to do. So you can stay with conventional. Right now, rates are just so good on FHA. I actually have people going from conventional loans to FHA because it's going to save them enough money monthly. We have a rate and term refinance, meaning we're not going to pull any cash out. That gets the best rates. So if you're just changing your rate and you're going back out to a 30-year, or you can do a 20-year or 15-year, and honestly, those terms, the years that you're paying on it, are all customizable. So if you wanted a 12-year mortgage, I could give you a 12-year mortgage. But those rate and term refinances are going to be the most simple, cut and dry. It's going to get you the best rate. What we have within our rate pricing are loan level price adjusters, and that can be whether it's cash out or not. It can be your credit score. it can be your debt to income ratio, it can be your loan to value ratio. Those are all going to impact what kind of rate you're getting. When you do a cash out, it's definitely going to give you a little bit of a higher rate. You're going to get a bump in rate. But like I said, especially if you're still going to a lower rate, it could be worth it. Or in that case where we had that lady with $40,000 in credit card debt paying $2,000 a month in minimum interest at 25%, like you're going to take the higher. There is a little loophole within the rate and term refinance. You can, the borrower can walk away from closing with up to $2,000 without it being named an actual cash out refinance. Okay, so again, on Monday, I just locked in one of my past clients, and he's like this 80-year-old guy. He's the nicest guy. He brings me candy and cookies every time he brings his paperwork in. And I said, well, Jackie, we're going to be able to give you an interest rate that's a whole percent under what you bought at. I said, it's not going to change your monthly payment a whole lot, but you have this credit card that's at $1,400 and he's on a fixed income. I was like, we can still pay that credit card off without having to do a cash out refinance. It just fits under that limited cash out. We're going to pay that off for him, and he's going to have like a $50 a month savings. And, you know, when you're on Social Security income, every little bit helps. And that $1,400 wasn't going anywhere fast for him. So he's super happy about that. That's what the little loophole. There's a $2,000 threshold if the borrower, you know, we try to get the closing costs as close as possible. But if the fees end up coming in lower than what we've estimated, the borrower can walk away from closing with up to $2,000 without having to take the cash out rates that are a little bit higher. And then, of course, with renovations, it's still going to be cash out of your mortgage. So we're going to pay off that first mortgage, but then we're going to give you a balance on top of that. So when you're managing through draw periods and paying contractors out, those are also going to be a little bit higher interest rate. But the best bang for your buck, if you're going to go into a refinance, is to do the rate and term, because that's going to get you the lowest. But again, if you're doing a debt consolidation or you need to do renovations, and that's going to help your property value, those will make sense too, just to take a little bit higher rate. I don't know what's next. That just froze. Oh, there we go. I wanted to give you a few examples, and this one in particular is actually one that we just locked in on Monday. So she bought last year at $250,000, and her loan amount's around $200,000, and she had to close her loan at 7.75 last year because that's where the rates were. If she sees the end of that 30-year term, and I'm going to give you guys this website because if you're reaching out to past clients or people that you want to work with, friends and family, if they've bought in the last 2 years, you can be picking up your phone and you can be making these calls because you can be working your database. You have something of value to offer them. You can save them a ton of money. And then hopefully when, you know, they go to sell, you're the person they call because you did them solid. So in this particular case, she's got a $200,000 balance. By the end of the 360 payments that she makes on that loan, she's paying $315,000 in interest. So she's paid for that house twice. If we now this week we locked her in at 6.25. And so now we're saving her almost $100,000 in interest. So it might only be, you know, a little over $100 a month. Actually, it's $200 a month. In principal and interest. She's also going to be saving $100,000 if she never refinances again and she lives there the rest of her days. But two, she's going to be skipping those 2 payments like we just talked about. She is going to be getting her escrow check back. And honestly, like I'll show you later on how we do a break even calculation just to make sure it's going to be worth it for the amount of time they're going to be staying in that house. But not many people are going to see the end of their 30-year loan. This particular borrower is also the one that's removing the other borrower from the loan. So she's getting him off, she's lowering her payment, she's saving $100,000. We're gonna roll the fees in, so she's not gonna have to come to the table with anything out of pocket. And then, like I said, she's gonna be cash flowing because she's not gonna have to make her November payment. She'll skip December. So that's really, really nice. The next example, and we did not go with this because, like I said, most people, they want to keep their payment as low as possible, and you want to commit to the lowest possible rate. If I have people that are kind of on the fence, I always advise them to take the lower rate, because what they can do is on their own, and I work with them, we'll do an amortization schedule and say, maybe you want to take a 20-year loan, but you want to have it paid off in 15 years. That's great, because if you have a job loss or somebody gets hurt or sick, you don't have to make the higher 15-year payment. All you have to do is make the 20-year payment. However, we'll calculate how much you want to make on a monthly basis to hit that 15-year goal, and there are no early payoff penalties. But there is an advantage to going to a shorter term. So if you go from a 30 to a 20, you're going to get a little bit of a lower rate. And then if you go from that 20 to the 15, you're going to get a lower rate. So in this example, we're going to go to a 15-year rate. We're going to get a 6% instead of a 6.25%. And now, instead of paying $315,000 in interest, you're paying $103,000 in interest if you see the end of that loan. So that makes a huge impact. And if you look at the monthly payments between the 30-year at 6.25% and the 15-year at 6%, they're really only paying like $400 a month extra. And that's a lot of money. However, I think a lot of people would agree there are places where they can, tighten down on their finances or their spending, in order to save themselves that $100,000. So there is a lot of controversy in the financial field, because you have people who are in financial advising and financial planning. And if they have a portfolio that they think they can make, 8% on a consistent basis, then they would rather that $400 be invested into this 8% yield account. But what a lot of people's concern and focus is really is saving on the interest here instead of building their money there. So there's a push and a pull, and Dave Ramsey is going to tell you to pay that sucker off as quick as possible. But for us in real estate, we also know that having those extra liquid funds could allow us to do an even bigger investment if you have the opportunity to get rentals or flips or however else you can grow your money in real estate. So I could go on and on about Dave Ramsey. There are some really good principles that a lot of people should be living by, but it doesn't work for everyone. So in figuring out if refinance is right for your client, we look at two different factors. One is a break-even point, and two is a net tangible benefit. If they have at least one of these net tangible benefits, then it makes sense to do a refinance. The second factor is a break-even point. So if I have my closing costs are $1,400 for the lender and $1,000 for, I should pull out my calculator too, $1,000 for title to be redone. So now we have $2,400 for the cost of the refinance. Now we are going to roll in the prepaid taxes and insurance for the escrow account that we start up again. We need a new escrow account for the new loan, but those aren't actually costs of doing the loan. Those are prepaids, and those are going elsewhere. The costs of doing the loan are going to be what comes from the appraisal, the credit report, the lender, and the title company. So we look at those as the actual costs, $2,400. And say in that other scenario, she's saving $100 a month. So we take $2,400 divided by $100, and that's 24. The result is 24. That's months. So in 24 months, she will recoup what she rolled into that loan for the cost, and then it will be nothing but savings beyond that. Now, If she says, I'm going to be taking a job in another state in a year, I don't even know if I'm going to be here, I would say you're not going to recoup the costs of this loan and this refinance. So we're just going to leave it where it is. If there's any doubt that there's like a good possibility they're not going to be in that home for that 24-month break even point, don't do it. It won't be worth it for what we're rolling into the loan, because we don't want them to bring cash out either, cash out of pocket. It, it just depletes some of the benefits of doing the refinance. So those are the two factors, and they're very simple, calculations, as you can see. And I'm also going to give you access to that calculator that we just did. So it's as simple as that. You can plug in the amount they owe, you can plug in their loan term and the interest rate. So if you are going to be reaching out to your databases, here's what I advise, okay? Here's a QR code for my app. If you want to download that, I have a mortgage calculator on there. The mortgage calculator also has a rate plugin. So they're going to give you an estimated market rate for the limited information that you're putting in. Obviously, you don't have credit scores. You don't know exactly what the loan to value ratio is or the debt to income, but this will give you an idea. You can run scenarios through that mortgage app, and the calculator is amazing. I get compliments all the time on that calculator. It really helps clients, especially when they're in their searches running numbers. But I'm happy to run numbers too. So if you get anybody on the phone and they have more questions, obviously refer them to the lender that you work with. But calculator.net/amortization calculator. So make sure that you're choosing the mortgage amortization calculator. But, I would just, put in a ballpark, whatever you can see the national average rate is, and that'll give them their savings. And and this is just me, but I think if you called me up as my realtor or a friend that just got licensed and you're reaching out to me and you say, hey, I know you bought in the last 2 years, but would you be interested in saving $100,000 on your mortgage? We just became best friends. So if you guys have, like I said, I didn't want to go into too much detail. I know I did speak a little bit of mortgage, but I know a couple of people hopped on later on. If you have any questions and want to set up a phone call or a Zoom, obviously let me know. But this is a unique period of time. And like I said, most people that have owned longer than 2 years did refinance in 2020 and 2021 when the opportunity was great. I also wanted to plug too, if you're listing properties where the borrower holds an FHA loan, and those loans are probably at 2 and 3%, you can market that property with an assumable interest rate. So whatever your seller's interest rate is on that FHA loan, you can market, hey, this house comes with a 3.25% interest rate. FHA loans are assumable. So what they would have to do is the borrower or the buyer would have to apply for the assumption, and they would have to qualify for that loan just like normal. And then they would have to get another loan to make up the difference. So obviously, if the seller has $100,000 left on their house, but the house is worth 200,000 and that's a sales price, they are going to have to take a secondary loan out to make up the difference, but they've got $100,000 at 3%. And that could be a big draw for a lot of buyers, especially when they're looking at 6% interest rates at the moment. I do have a question in the chat. Oh, nice. That's a comment. Does anybody have any questions or like, even if you have like a deal going on right now with like a sticky spot, do you have any questions that you want to throw out? We can make this a ask the lender for the moment. And then if you want to hop off, I don't want to hold you up either. I don't know how to get out of sharing either. Stop sharing. Well, I want to thank you all for taking the time to hop on, and I hope this helps. I hope this gets, a couple of your sphere or your database people excited, and pays off for you.
Thank you, Kayla. I
Thank
appreciate it.
you. It was great talking to you, meeting you.
You too.
Thank
Nice
you. It
to
was a
meet
lot
you.
of good information.
Good. I'm glad. I love when I see you hop on and Bree's on too. All right, ladies. Well, you have a good afternoon and thank you again.
Thanks, you too.
Thanks, you too.
Bye-bye.
Thank you.
Thanks, Bree.
Bye.